Management of Minda Industries. They're here to talk a little bit about the misery that we're seeing in Motown. Is there any hope amid the transitory troubles? Any revival? Can that be seen? Well, joining in right now, we have with us Sunil Bohra. He is the ED and Group CFO of the company. Thank you for taking time out and joining us on ET Now. It's fairly challenging times for the sector as a whole. Give us a sense as to what exactly the industry is pinning their hopes on, because there are talks of some sort of a reprieve coming in, some tax breaks. What is it that you want to hear?
No, definitely the times are tough. Nobody sort of envisaged this a year back when we started seeing that the weather, the wedding season, the Diwali season was not so good, and post the ILFS thing, everybody thought that in 1 or 2 quarters things will stabilize, but things didn't pan out as we thought for, and we are seeing almost volumes which are low in sort of 2 decades. We have not seen this kind of drop in volumes. So obviously these are tough times, challenging times, and these are times to tighten our belts, do a lot of things which we normally don't do, like really looking at your capex, your growth plans, tightening in terms of your expense cost management. So we are not leaving any stone unturned, and I'm sure that's the story of the industry, to stay afloat. And I think the toughest will survive. And this is I would say, a time when everybody is sort of trying to work with each other rather than pulling each other down. We are trying to work with everybody to see that how we relook each and every aspect of our costs, each and every aspect of our customer need. How do we make sure that this time, which is the lean time, we utilize for a lot of improvements, upgradation in the system, quality, etc., etc. So I think we are trying to make the most of it. At the same time, we are trying to see that we maintain our margin and we maintain our market share, and see that consistently the path which we have set ourselves a year or 2 back, we want to stay on that track, and we don't want to lose our focus. And that's the key reason we are still going ahead with our capex, the greenfield capex plan which we have laid out for ourselves. We will be still in this market, we will be spending capex of close to 400 to 500 crores in this year. Our bulk of it is towards the greenfield capex, and we firmly believe that the long-term story of the country in terms of growth, in terms of the potential demand still there, while these are the headwinds, and I'm sure every industry sees these headwinds at one point or another, while this time the headwinds are much stronger than we thought of. But I think we will come out stronger, and as an industry, we will do much better once this phase passes off.
Also wanted to understand what really, Sunil, is the contribution from the value-added products. Is there a scope to grow their volumes given the regulatory changes, safety norms, BS6, etc.?
No, definitely there is potential to upgrade, to premiumize the products. Like in lighting, we are seeing it specifically in 2-wheelers, the normal halogen lamps being upgraded to LED lamps. Because of BS6, while in terms of our product portfolio, we don't have too many products which are directly linked to BS6, but wherever they are, like filters and all, there is obviously a value uptick, and that's why you see that the industry is definitely expecting the costs of the vehicle to go up from BS4 to BS6 transition, maybe higher for a diesel vehicle compared to petrol. But this is the journey which we all have to live with, and I think we are fortunate enough to see that most of our products are agnostic to the fuel injection system, so that way we are also protected to a large extent.
But tell me, what's the margin visibility if the share of value-added products does improve further? Which are the new products also with most potential in terms of both demand as well as profitability that you foresee?
Yeah, in terms of margins, as you know that we have obviously tightened our belt over last 3-4 years. We have moved our margin range from 8 to 9% to close to 12% last year. And at the beginning of the year, we were very confident to meet our margin range of last year, which is 12 to 12.5%. And our first quarter numbers were broadly in line with that number. We are happy that we are able to maintain those margins despite the pressures which the industry is seeing. We are at 12% in Q1, and we are quite confident that we should be able to maintain this broad margin range for the rest of the year, despite whatever the industry is currently witnessing. In terms of our new products, as you know that we have currently in process of 3 new products which we are currently putting greenfield facilities, which is the alloy wheel for two-wheelers, the controllers and the sensors. And in terms of margin, we do expect the margin for those new products to be broadly in line with our existing product portfolio. We don't expect any significant bump up, because while we are adding 3 new products, we already have almost 30 products basket, which is averaging at 12%. So the 3 new products definitely we don't believe to be significantly increasing our margin profile.
Okay. Several analysts continue to be a bit cautious about your growth in the near term due to the auto sector slowdown. Just give us a sense on how you feel the second half of the year will pan out. What are you sensing on ground?
Oh, definitely there are a lot of expectations from second half perspective. With the good monsoon which has picked up of late, while obviously the large part of the few states is submerged underwater, and which is not a good news, but obviously in the medium to long term, when this phase passes away, obviously the kind of rains we have seen will definitely lead to good agricultural growth, and that will expected to have a better weather and better season demand in the Diwali this time. Plus in second half, what is the expectation is that people who have been deferring their purchases, there is a general expectations that when we have moved earlier also from BS3 to 4 or 2 to 3, there have been general demand uptick happening. People who have been deferring their demands, who have come to market, or people who are sort of preponing their purchases to come to market because the likely increase in the cost from of migration from BS4 to BS6. So definitely there is a lot of hopes built in H2, and we are geared up to sort of meet those demands, and we are quite confident that second half will be much better than what we have seen the first 2 quarters.
Fair enough. Thank you for sharing with us the outlook, saying that yes, there is a slowdown that is very much evident, but they will have to bear that and come out stronger on the other side.